This is the Griffin Realty Group Ask-A-Griffin podcast, episode number 3. What do you mean by a price trading range? Are you a buyer, seller, or a real estate agent who has questions about buying or selling property, but you can't find an easy way to get your answers? Well, then, hey, you're definitely in the right place. I'm Danny Griffin, the founder of the Griffin Realty Group and the host of the Ask-A-Griffin podcast. Now, to help you take immediate action to get started in the right direction, if you need to buy or sell property right now or in the near future, you can take advantage of our free step-by-step guides waiting for you over at griffincourses.com. All right, let's get started. What do you mean by a price trading range? All right, well, the first point here is, have you ever wondered how an online estimate is actually calculated? See, a lot of home sellers have gotten used to, or home buyers who are curious about the market price, have gotten used to being able to go online, which feels so convenient, and just go in and find a spot that gives you a guesstimate on a value and type in the address and voila, it's there. And there's a caveat in that, folks, okay, is that why a price trading range is a discussion is because it's like Wall Street, where I learned, my chops, where I started in business, where I saw this bid in this ask for a share of stock, whatever it might be. That was the marketplace. And in between that bid and that ask, there were people who were market makers, literally. I mean, think of the Wall Street trading floor. Now it's done with the help of machines, in some cases only machines, but there are still, I know, traders to this day. I mean, they're actually the market makers who are pulling the price, the bid and the ask together to make a market at a price. So it trades in this range. A highly traded stock trades very tightly. A loosely traded stock, the bid and ask can have a big spread. But in real estate, that trading range or that spread can be big. So let's go back to this algorithmic approach to it, right? You go online, there's some sort of a mathematical or algorithmic approach to it where somebody comes up with a guesstimate. And you wonder, well, how in the world could that be? Well, see, we live in a world of data science. That's a key buzzword. I have young kids, and one of them is interested in a financial background. And he's been told you have to really pay attention to data science because technology is going in and mining this big data. You've probably heard that. Pulling it out through algorithmic processes to make decisions, to make guesses. And that's what's happening in real estate. People are putting pressure on algorithms to go in, grab big data that exists about a particular property, and spit out a guesstimate of value. Now, it sounds wonderful, but as an insider, I can tell you we are still a ways off from having it really be anything close to accurate. I know that because I recently sold my own house, and several of the sites that claim that they can give a value, well, they dropped theirs by quite a bit when I actually lowered my price, because I'm the real trader, down to where it belonged. After hearing the feedback and seeing not much activity, I fixed it. And all of a sudden their quote-unquote algorithm chase me down. Well, you know what data they're mining, nothing more than the MLS price corrections, right? I'm not saying that they didn't start with something before that, but I'm saying let's just be realistic. It's a tool. It could be a helpful starting point. But folks, there's just so much more to understanding pricing in real estate. So let me try to help you get there a little bit better. The way that these online algorithms really work in real estate is that they're able to go into, think about what this is, public data about properties. So what public data is readily available? Well, everything at the assessor's department that discusses all of the details of the property. Now, I know in some states like California, that can be really askew because they don't reassess everything on an even playing field. But let's just, for sake of argument, saying that can be adjusted. In general, if you want to go mine big data, you just get it from a conglomerator of that data who might have housed all of that, all of that assessed value information. And they pull it out, throw it into an algorithm, can come up with a guesstimate. Now, see, the challenge with assessed values is they are a fantastic measure of value when you're measuring against them. They are not current market value. If you ask any assessor's department how they adjust, it really could be, I know in the town that I live in, they're 18 months at least behind the market price. So market price is what moves very quickly. Think about how quickly the stock market moves. It's like lightning, like I said, because it's way more efficient and it can move just on guesstimates of what's going to happen. Real estate acts similarly, but it's a little bit more of the tortoise and the hare. The tortoise is a little bit slower in real estate. But But companies have come in, and I don't know whether they're trying to replace the agent per se. I mean, I've heard it from my friends that are traders. Yeah, they've been trying to replace me forever. I'm still here, still adding value. So real estate agents have an easier time adding value in this case because the algorithms are nowhere near as sophisticated. You go in, you grab this assessment, and if you look at some of these disclaimers on the guesstimates that come from an algorithm, they'll give you a disclaimer that they could be off by 20%. 20%. Do you know what 20% is when you compare it against the efficiency of the real estate market in and of itself? Even a tough, slower market like one of them that I practice in Cape Cod, we're still running it, in the last I checked, 95.41% of the sold price to the last asking price on average. So there's your efficiency of the marketplace itself and all the realtors or market makers who are involved making all these timely adjustments in real time, not some algorithm that's moving much more slowly than we are. So again, there's mathematical proof just based on the fact that there's a disclaimer on an algorithm. Now, I know people are really working hard to close that guesstimate down to 5%. Wouldn't that be great? Hello? We're already doing that in the marketplace. And in some cases, where the market's hot, for example, the Boston market's been very hot, the variance has been within 2%. I say variance in that case because for a while it was about 2% over the original asking price, and now it's a little bit about 2% below. That's pretty darn efficient, right? Now, again, remember this to the last asking price. So if it didn't start off correctly, and that's the key point here, if you don't start off correctly by pricing it right, that can be an issue, but I'll save that for the next episode. So there's enough public data out there to make this guesstimate, and it's just not rocket science given all of the available algorithmic help that you can get out there online. It's relatively easy to come to that kind of a wild guesstimate. I'm not saying it doesn't cost thousands of dollars, but hey, look, folks, the real truth is only a property visit can help make the right adjustments. There's only going to be so much you can do online. It's the same thing, by the way. I worked for an analyst on Wall Street, and until we actually went and visited the companies and really saw the stuff for ourselves, saw the production, met the management, etc., you couldn't make the adjustments and the guesstimate on the direction of the company. Well, how are you going to do that with a house? I mean, we have things like interior and exterior condition. That's a pretty big deal. See, a lot of you that are looking at this and saying, well, I see that the square foot price is, well, wait a minute. What about the layout? Forget the square foot price. You're not buying a barrel of oil. It's not a commodity. You have to get in it. How does the sun hit it? Are the rooms laid out the same? See what I'm saying? I could go variable upon variable upon variable. So until a professional real estate agent goes in there and takes a look and begins to make adjustments, plus or minus. It's very similar to what an appraiser does, only the appraiser just considers 2 or 3 other properties, and they're just trying to justify a loan for the bank. So it's even less than what an agent does, because the agent's job isn't done. Appraiser gets it, finishes the report, sends it. That's it. Well, the agent actually has to make a market for it. You actually have to have a buyer who agrees with the appraisal value, who agrees with the original asking price, whatever it might be, so that by getting in there and doing this correctly in the beginning by making the right adjustments and taking your time mathematically, you can really make this, fit the price range. But you can also give suggestions to the client on how they can improve that value by making some adjustments in the positive direction, all right? And then the last thing is, once you actually start off and you get into that trading range that you think is reasonable based on your adjustments, the only boss that we all have when it comes to that is the marketplace and its feedback. Again, think about Wall Street. I mean, if you're asking too much for a singular share of stock and there's no bidders, hello, it's not worth that to the marketplace. So as much as we might fall in love emotionally with our own primary residence, like I was in the middle of selling mine, not that I've fallen in love with it, but I had a lot of fun memories there of raising my kids there. I was certainly emotionally attached to the projects I had performed, the beauty of the house that I fell in love with, and that's a lot going on. But as soon as I heard the marketplace saying, yeah, we don't love it as much as you do, you better make your adjustments, that's how, in an ongoing way, we're able to narrow the trading range. So again, let me go back. Let's just say you start with the online guesstimate. Now you have a professional realtor come over and you listen. Don't get hung up on a guesstimate on big data. Have a realtor come in and say, Why do you disagree with this? Do you agree with it? Is it too heavy? Is it too light? What is it and why? What are the adjustments you're making for interior condition, exterior, staging? All those things matter. Location, hyper-local pricing in the neighborhood. Are there dilapidated homes that are affecting it? Are there waterfront that are pulling it up? All these things need to be made for adjustments, but ultimately you start inside a range based on those adjustments, but then you listen closely. And by the way, I don't care how long or quick it takes to sell properties in your neighborhood. All that matters is your particular case. Listen to the marketplace, get the feedback. If they're telling you they saw 4 properties and yours doesn't offer the best value, then you have to make a price reduction inside that range. By the way, if you're a seller, stop saying I'm not going to give it away. Just adjust your price. You can't give away a house unless you put the keys out front and say, free house, here are the keys. Okay? You're just simply moving closer into where the true activity is for the property. All right, let me go back over this. What do you mean by a trading range? Well, I mean, first of all, considering that when people are trying to price their house, there's no bingo magic number that an online algorithm will give you. It's a good place to start as a data point inside what could be the range, but it could be way out too, so you better be careful. And these online algorithms are using only one piece of evaluation, and that's big data. Could be from the assessor's value, could be now pulling from some MLS, but they have to guess at that because nobody's what? Third point, ever been in the house to make the adjustments for condition, location, hyper-local market trends. Those are other 3 major factors that really have to be considered. But ultimately, the marketplace is the boss. Listen and make the adjustments based on the feedback you get. All right. I'm going to summarize this in a key point. It's easy enough to develop an algorithm to search big public data to make an educated guess as to how much a property will sell for, but only an in-the-field assessment will help narrow that range so you can help set a reasonable asking price. All right, remember, you can take immediate action to get started in the right direction if you need to sell or buy property right now or in the near future by getting our free step-by-step guides at griffincourses.com. Also, please don't forget to subscribe to this podcast so that you don't miss out on any insights each time we upload an episode. We also post all of our episodes on our social media channels, so remember to turn on your notifications for Griffin Realty Group so you won't miss the reminders. We'd also appreciate it if you would share this content with other people like you so they get the help that they need and you can join us on our mission to becoming people for others. Hey, thanks for listening. Remember, nobody's coming for you, so go get to work on your own plan and ask your own questions, and we'll keep bringing you the answers here. Thanks for listening. See you in the next episode.